No, we're gonna hear all
I can
pounding.
hear all of that.
Is that annoying anybody else?
Well, that's what happens when you do this kind of thing.
Happy Friday. Our pounding is from some baseboard. There it is.
There
We're
it is.
just gonna have to ignore it.
That would be all
We're
right.
just gonna have to work through it. Happy Friday, everybody! Finance Friday! Yay!
Yes.
This is the show where we give you the information you need to help you create, grow, and protect your wealth. I am Amy Novakovich. I'm a certified financial planner and a chartered retirement planning counselor, and this is the lovely Bethany Henchesmore. Hi, Beth.
Hi. She was joking with me that she might say the wrong last name. It's still
Well,
in my name, so
it
it's
is,
okay.
but see how I've always known her was a different last name, and then
I didn't make it any easier. It's not like
now we have Andy in the family, and it's
Oh,
just
yeah,
like,
I know.
see, he's a Henchesmore.
Yeah.
Like I just have to I have to merge the names in my brain, diffuse it.
Jeez.
Anyway.
Yes.
Oh God, we're doing great. We're starting great on this Friday. Share this out. We're talking all things employer benefits today. So whether you are an employer, like the manager of a firm or a business, or you own a business, or you are in HR, or you're an employee of a business and you want to bring it to the business owner. We're going to talk about all things that business owners sort of do to help retain their employees. So share this out, comment, give us any questions. We're happy to answer the questions.
Correct.
Oh yeah, I was going to share this out.
I have it shared
as
out
I'm
right now.
telling people to share it out. We're going to share it out because what can happen is that people think about employee benefits as kind of like a pain, like something they should just do, like when they
Right.
get to a certain size. So it gets misconstrued as instead of a benefit for taxes and for retaining employees and for growing your money, it's looked at as kind of like something to do,
Correct.
like something I have to check off my list. And we know this because we talk to business owners, right?
Right, and it does oftentimes for them seem like, right, one more thing to do, but for employees, there's a huge benefit for those options if you're able to provide them. So,
Well, and then nowadays, like it's not like right after COVID where pay was really increasing, right? There was a time there
Right.
where the pay, people would jump jobs because of the pay. But now we're getting back to reality, which is
Right.
I go to a job for the benefits. I go to a job to see what kind of health insurance they have, what kind of 401k they have, which is a retirement plan, what kind of health savings accounts, flexible savings accounts, which we'll get into. Share now. We are live. Share. Okay. So the first thing that people usually start with is retirement because let's face it, it's really hard to think of our own retirement on our own.
yeah, true.
Why is that so hard? I don't know. I guess it's long
We're
in
all
the
getting
future.
there.
Some people think like, the one thing that I always say is you cannot get back time.
Right.
Okay. So in an employer plan for retirement, there are several benefits. First of all, your instant appreciation if they match. So, and a lot of people think like, oh, this is common knowledge, Amy, and maybe it is to some, but how many employees and participants do we sit with that are like, wait a minute, so I put in money and I get the exact match, like free money? Like, yes, as if you are declining a raise.
Correct.
So you would be sitting with your employer and they're like, hey, how about I give you an extra 3% in pay or 4% in pay or some employers 6% in pay? And you're like, I don't think so. I don't want to deduct the money from my paycheck. Like you're declining a raise. They're going to give you cash, a percentage of your pay, your compensation. Yes, it's not instantly in your pocket, but it's better. It's in a retirement account for you later. Therefore, your dollars that you didn't spend grows and makes you money and reduces your taxes. So it's when it's growing, it's not reducing your taxes. My point is you don't owe capital gains tax on those gains because it's in a retirement account. I might be talking over some people's heads. I feel like
Well, there's
it
a lot
gets
of
complicated.
Well, because you can go down the retirement rabbit hole, but there's other things too, like
For sure.
the health savings accounts.
Yes. So when you put another way that people can save on taxes, if you are an employee somewhere and you need to have your health insurance, if your employer offers an HSA, health savings account, if you put money in that HSA, it comes right off of your income. So it deducts from
Right.
your taxes. And the beauty of that, unlike the retirement account, is that if you use that money to pay for health expenses, it's tax-free.
Right. So we have that. My husband is a police officer, so that's one of the things that has been helpful with us is that anytime the co-pays for your doctor's appointment, any of your prescriptions.
Tax-free.
And the way his is set up, it's deposited right into our account. So as soon as it sees us pay, like it comes through, boop, it's right into our account. So that's
and I think that's a lot of thing that
that's really nice.
People don't realize is that they're just paying expenses. You know what I mean? With income that's already been taxed. And what they don't understand is they could avoid the tax.
Correct.
And tax is a lot, guys. Like, I don't know, a lot of people don't understand how much you pay in taxes because it's withheld from your paycheck, right? So you think at tax time because you get this big refund. I should have said this in the very beginning. Do you know how many people think that because you get a refund at tax time that you don't pay a lot in taxes? Yeah. Do you know that's just giving the IRS giving you back your own money that you overpaid?
It's free loan to the government.
So you have to look at what's been withheld from your paycheck. So like on a year-to-date paycheck at the end of the year. So you could look at, we're almost getting to the end of the year, but you could look at end of year 2024 and see how much in federal income tax was taken from your paycheck. And then tell me you still feel like your refund is great. Because like, oh yeah, I got a $1,000 refund. Okay, well you paid $8,000 in taxes.
Right.
Wouldn't it be nice if that went down and you got more of a refund?
Right.
Or you could mark a different, on the W4, you could mark a different option or a different number, different withholding. You know what
the withholdings,
the different withholding.
There's dependents and then there's an extra dollar amount you could withhold if you want.
So when you're filling out a W4, they're asking you how much should we take from your paycheck in taxes.
Right.
So if you increase the number of dependents or you increase the number, they will take less from your taxes. So if you can get involved in a health savings account, in a 401k, things like this, it lowers your tax bill. And then not only is that extra money in your pocket, right? But if you're sitting with a financial planner like we do with our clients that are not retired yet, right? Maybe they're business owners, maybe they're not. Maybe they're just people that are trying to get by and trying to save for retirement. That is money that didn't go to taxes that now you either spend and it evaporates as if it never existed.
True.
Yeah, that's the truth. Or you put it away and invest it, and then you grow money on that money, and that money grows money. Okay, so in a health savings account, when the money grows, you do not owe capital gains tax on the growth. You can use that money, pull it out for health expenses, and it's tax-free for the gains. And you never paid taxes on the dollars. So who doesn't want to, like, I don't want to be flagged by the IRS or anything, but really, let's just face it, who doesn't want to pay less to the IRS? Right. Do you like the IRS so much? That
I don't say dislike the IRS. No, they have a job to do, but I don't want to pay them any more than I need to.
Right. We just want to utilize, we want to get the benefits that we can. So that's why we're doing this. So again, all things, I was told to like repeat myself for people that are joining. All things employer benefits, whether you're an employee or whether you are a business owner. When you do these benefits, you save on taxation. You help yourself grow your money for either healthcare expenses or retirement expenses. Okay, the third one. We've talked about a 401k briefly. We've talked about a health savings account. We'll circle back to the 401k in a second. But a flexible spending account, so an FSA. These are more rare, I would say. I don't know if rare is the
I had
answer.
one at the hospital, but I have never had one since then.
Yeah, they're not super popular, but I guess all I want to do, I don't want to get super into it because again, can be confusing, and I actually think the retirement is more important. But if you have an FSA at your work, or just ask your HR department, or just look at your list of benefits. If you have an FSA, just give us a call. We can help determine if that's something that you should put the money away. Again, it's a way to get a tax deduction. Another way to get a tax deduction, another way to grow your funds, to get them working for you. Right? Okay. So now, back to the 401k. My husband's going to kill me if I talk about this. But the difference is, this is just so important. It's important between traditional and Roth. Almost all employers now, guys. There's our pounding. Almost all employers offer Roth or traditional. You need to sit down with someone to determine which is right for you, because it could cost you tens of thousands of dollars in taxes over the next 10, 20, 30 years if you're picking the wrong one.
Correct.
Like for instance, I had a client the other day that is already retired, been retired for like 15 years. The last few years of working, he worked so hard to put all his money in Roth. And then they converted a few times to Roth. And I'm looking at their tax return and I'm like, you're in the 12, 13% blended tax rate. Like I was just wondering why you paid all those taxes while you were working and while you were working, making more money.
Right.
Converted while you were working. Paid the taxes on the conversion. Now you're retired, you're in a 12% tax bracket. Yay. I mean, I'm happy for you that you're pulling the money out tax-free and Roth. Again, I'll break it down in a second. I'm probably talking over some people's heads. Some people are sitting there going, I don't know what you're talking about. But the point is that I'm trying to give an example that you have to sit down and see which one is right for you. Because now they're pulling out that money tax-free, and that's great. But do you know how much money they paid in taxes?
They paid a lot of money.
So do you know how long it's going to take to make back all that money?
Because they were at a higher tax rate when they were working. So
okay, so here's the difference, really in a nutshell. Traditional, which is the regular way that most people do it. You save on taxes now. When you go to live on the money later, you pay taxes. Okay? As the money grows throughout the year, you don't owe capital gains. It's called tax deferral. Like a normal investment, you buy a home, right? You sell it, you pay capital gains tax. Above and beyond your exclusion, blah, 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 blah. I know there's details in there. For those of you that are like, not really, not necessarily. Yes, I know. I'm trying to keep this very simple. For the most part, when you sell an investment, you sell a stock, you sell a home, you sell anything with gains, you pay taxes. Not in a retirement account. You get a tax break now, money grows, tax deferred, pay the taxes when you're retired. Roth is flipped.
Right.
You pay the taxes now. Money grows, tax deferred. When you go to take the money out later in life, as long as it's beyond 5 years, the money actually comes out tax-free. So you need to determine not only your tax rate now, but your tax rate when you retire.
Correct.
You have to predict the future. And in order to do that, you need a planner that can help you.
And she's a certified financial.
That can help
By the way.
I don't have a crystal ball, and I have a magic 8 ball, but it's not always right, as Scott always says. But I can help you sort of make a good educated guess and save the money in taxes wherever it may be in the choice. Now, I also have some clients that split it. Do a little bit in both, traditional and Roth, in both. Why do you say? Well, maybe they are a business owner. And they're like, you know what? I don't know how long I'm going to work.
Right.
And I have some real estate. And maybe when I'm retired, I'm going to end up being in a higher tax bracket. Like sometimes, like you've had a couple businesses on the side. Sometimes you don't know, like, okay, well, maybe I'll retire from my main job, but I'll be working these other businesses.
Yep.
You know what I'm saying? So you don't know what your tax bracket will be later on in retirement.
Correct.
So we want to be careful about this. So going back to employer benefits. If your employer, or if you are an employer, a business owner, what's in it for you? Well, every time you put away money for your employees, tax deduction. Every time you match and you put in profit sharing, tax deduction. You're helping retain employees.
Absolutely.
Because you're giving them huge benefits.
Absolutely.
You're helping them save for their future, and you're giving them free money. So if everybody doesn't want to like rehire employees every year.
She looks at me.
I don't know, but yeah, even though Beth left and came back. But I didn't have to retrain you.
True.
You know what I mean? Like my point is you don't want to hire new employees that come back every year because you have to retrain new people, and there's a cost of retraining new people.
And that's a whole
different thing.
a whole different thing.
But when you are also giving out bonuses, I've had clients that restructure their bonus in the form of profit sharing in their retirement plan because they get a tax deduction for that.
Oh, cool.
And when you process a bonus, you have to pay payroll taxes. So now not only are you not paying the payroll taxes, but you're saving that profit sharing. So employers, listen up. You have to sit with somebody. Don't wait until you're at 100 employees to decide, should I be doing a retirement plan to retain employees? Right. That's way too late. Way too late. You left too much money on the table. Tens of thousands of dollars. So between HSAs, FSAs, 401ks, you're missing the boat on tax savings for sure and on retaining employees. And then you're wasting money on training, and then you're wasting payroll taxes on bonuses. I mean, I could go on and on and on. Nobody likes to waste money. So I would say that's my spiel for employer benefits.
So that's the good part, that we're in the last quarter of 2025, which I don't even know how that's possible.
Yeah.
And when I look up for topics of what we should do on Finance Friday, because I'm always very curious about what's trending in financial news and what is not the same old, same old, same old. And I found this, and I actually, now that I started looking into it, there's a lot about it. It's called the Great Lock-in Trend. And think of it like dry January where people commit to something for 30 days. This lock-in trend
Only
is
30 days, huh?
this lock-in trend is trying to get you to lock in on your financial goals for the last quarter of the year.
Yeah.
Or even a month. I mean, you've got the holidays coming up. Do you still do that? Who starts shopping for the holidays now?
I do.
Yeah, I know. I was like, when you got littles, that's what you do.
Well, you have to like use Amazon Prime Day,
That's true. That's coming up
which was already well, there was already one
in July.
August.
Oh, was it
July?
August?
I don't
I don't know. I
know.
thought it was July. So it allows you to, before the end of the year, figure out any tax planning things that you can take care of, any financial goals you wanted to do. It's a great time to sit with your financial advisor or your planner, or if they happen to be both, and work it out and see where you're at. And you might be off. This year was rough on inflation, especially, and the interest rate. So
It's getting better. I
It
mean,
is.
interest rates just went down, so we're going to start to look at adjustable rate loans, credit card balances, credit card rates. So towards the beginning of the year, you should always be doing it. That's why these trends are so funny. It's like, oh, New Year's. It's like, how about new month? October
it should
1st
be.
just happened.
And it just feels like,
We should do this.
in light of the interest rate cut, it feels like this might be a good time to see if there's anything that you can
do.
Yeah.
Well, and if you want to commit, then this circles back to employer benefits. If you're one of those that your employer offers something and you've just never done it because A, maybe you don't know enough,
Yep.
or B, you think it's just going to take money out of your paycheck and you're like, I can't afford to take more money out of your paycheck. Let's look at it. You should look at it. You really, really, really should, because you're leaving money and taxes on the table for sure. And I would be willing to bet that I could even prove to you that you'd actually save more money
By
by
participating.
participating.
Yeah. And open enrollment for a lot of these things starts to happen about
That's
this
true,
time.
right now.
Yeah. September, October, November, you start to see when employers are trying to get ready
Open
for
it
the
up.
next, they're trying to get ready for the
Correct.
next year.
So now's the time to, what's it called, the lock-in
The lock-in
trend?
trend,
Now's
yes.
the time to lock in
Yep.
and do it. Finally do it. This is the year that I do it, that I participate, and I call it adulting.
Well, and,
Adulting.
and
You
if you
gotta be-
saw our social media today, you can do all the things that you can do. You can do all the things right, or you could have a
Hi, Aubrey.
major health instance like we had here 2 years ago, and you can't plan for that.
That's right.
So,
He doesn't want me to talk about it
Okay.
so much.
well,
But Jim is a miracle.
he is a miracle,
Yes.
and I even put on my social media. So this is where
Today was the day.
today was the day.
They took him off life support.
So, and I put on my social media, but I'll share it here too as we're winding down Finance Friday. But I was staring down the barrel of a double breast biopsy because October is also Breast Cancer Awareness Month.
Oh, yay.
I have a 70% chance of developing it based on my family history, and I've already had cancer once, so yeah, yippee me, right? So I'm with Amy in the hospital. I'm not working for her, but we never lost touch. And she's praying over it. And I'm like, your husband's a few walls over, and you're pregnant. And you're worried about me.
I was.
I know. So if that tells you anything you need to know about Noah, that's it right there. Because I'm sitting with you
Yay.
in this hospital. I'm like,
And prayers were answered. Yay.
I didn't find anything. Yay. So October being Breast Cancer Awareness Month. So that kind of, I was like, wow, I wasn't even going to plan that. But that's just how it happened
That's
to work
good.
out. But
Yeah.
it was Jim's Miracle Day.
Yep.
We
Today.
also
It's a
do
year.
wear our red on Fridays because you remember everybody deployed. We have a veteran in our office who actually shared some of his deployment
That's
stories here a couple weeks
Many
ago.
times.
So that was interesting for us. Also, as a reminder to anybody who is in the financial business and have already figured out that Nova's the vibe that they maybe want to be a part of, give us a call. Give us
Reach out.
a message. We'd like to talk to you.
Absolutely.
See if it's a good spot. So, anything else you
Do
would
it.
like to?
Partner up. I don't think so. We're at 19 minutes.
Hey, we covered a lot of ground
We
in
did.
19 minutes.
I feel like we did.
If there's any topics you ever want us to discuss, we do have a lot of
Yep.
information on YouTube, and she talks about that too. There's like
Message us. let us
almost
know.
300 videos on YouTube.
There's a lot.
So if it doesn't answer it there, or you might want some updated information, let us know because we'd be happy to talk about anything that they want us to.
Yes.
Okay.
That'd be great.
See you guys next week.
Have a great weekend.
Bye.
Bye.